there's no resistance up above here. Obviously, no, nothing up here. Stock has been on quite the run. There's going to be definite support even before it gets to the 50-day here. There's going to be support where this old resistance was here and here, right around 190. Okay, anybody else having problems with the audio? Rob, might be on your end. All right, so let's take a look here. Let's see what the market is looking at here. What's the expected move here in Mickey D's? Okay. Yeah, so right in the range of about $6.50. So let's get this guy on the board. And I don't think it's coincidental. We'll see that, that range to the downside is going to be right where that big support is. Stock is 196.5. Expected move is about 6.5. So that puts us in a range of 190 up to 203. Okay, we said there's nothing above in terms of resistance, and then again, on the downside, we've got that big support right here around 190. Okay, so big support around 190 and nothing above. Let's see what volatility is doing and what we're looking at in terms of iron condor, just to see a non-directional type of play. And that's just going to be so, well, this isn't bad. The $1.25 isn't bad, but the break-evens on this is not going to be great. So this is the 192 half, 190, and 200, 202 half iron condor. $1.25 is a great price, but the break-evens on this are so inside the iron condor. Oh, so inside the expected range. Okay, so that is absolutely not something that we would want to do. And if we adjust the strikes at all, you're going to see how much credit that removes out of the equation here. So check this out. Even if I raise the strikes here to get us a higher break even on the upside, now that iron condor is at $1. What kind of butterfly, Kevin? What kind of butterfly would you be looking? Well, that's going to be directional, so you look at up or down. Okay, I don't mind looking at an upside. I'm just saying right now for a neutral, range-bound trade, that's not good. The iron condor is not good. If anything here, I'm probably looking at an upside, or this could be something like what we did last week where we wait until after earnings, and if the stock gets down to the 190 area, man, oh man, that's something that we, certainly want to jump in on. I'm just looking at some stories here to see if there's been any analyst revisions recently. The original McDonald's, guys, was about a mile from my high school. Very close to where I grew up, in Des Plaines, Illinois. All right, well, let's take a look at, given the expected range to the upside at around 203, let's just look at first a calendar. See what volatility is doing going out here. Yeah, right, Todd? For sure. For sure it was. Man, these calendars are cheap from a dollar perspective, but are they cheap from a volatility perspective? All right, this is a 202.5 calendar spread. Obviously, the longer we hold on to that for the week, the better it is. Okay, that's not bad. Let's check a 205 calendar. And I've crushed this vol pretty good for next week. Well, 205 is much better. Much better. Wow, 205 calendar looks fantastic. Okay, so Kevin, you were talking about a broken wing fly. Tell me what you're looking at. What strikes would you be looking at there? iRobot, by the way, really nice move. Okay, so that's a regular butterfly. That's not a broken wing. That's a regular butterfly if you're targeting the 202 half. And why is that a regular butterfly, everybody, instead of a broken wing? Exactly. Exactly. So that should be really cheap, as as butterflies are, and it is. It's probably 25 cents to do that, but that's not something I'd be interested in here. However, if we did really like an upside move, then Kevin doing the broken wing. Well, it is two of the sell, Kevin. It's 1 to 2 to 1. A butterfly is always, whether it's broken wing or symmetrical, a butterfly is always 1 to 2 to 1 ratio. Now you can have an unbalanced butterfly, which is different from a butterfly, but a butterfly is always 1 to 2 to 1. Now, if you wanted to look at a broken wing butterfly, we could do something like this. The 197, 202 half, 205. That's pretty cheap. You can do that for, maybe $1.25. That's pretty cheap, guys. So the broken wing, Kevin, what's different about this butterfly right here than the one you suggested? Well, your first buy on your suggestion was out of the money also. The long. So what's the difference? Well, they're both to the upside. Both of these are upside butterflies. This is not to the downside. These strikes are all on the upside. There you go. So a broken wing butterfly is when the spread differentials are not symmetrical. So in yours, each spread, the long and the short, were $2.50 wide. Here, the long part of this spread is $5 wide. The short spread is $2.50. So that's what gives you the extra delta, the extra directional bias. Okay, this is really good. This is really, really good. If you like an upside play here, the reward to risk on this is great. So the 197 half, 202 half, 205 broken wing fly for $1.20 is really good. Okay, but what I want to do here, guys, is wait a little bit longer in McDonald's here. Stock's getting hit. It's kind of soft here. I still like an upside, but let's wait a little bit longer in the day and see where things come in. All right? Everybody okay with that? All right, let me post this up on the screen here and we'll see what happens. Okay, let me get it up there. I'll be right back, guys.